Welcome back to Ferocious Education. This is Ed. Today, I'm going to be talking about IAMGOLD Corporations, also known as IAG and IMG on the Canadian market. Now for this one here, I'm going to bring new pieces of due diligence, technical analysis, updates, and what I think about this one from my last video. So without further ado, let's jump right into this one. My last video is in the description below. It's quite a hefty one, around 30 minutes, but this one here hopefully be a little bit smaller or shorter. So IAMGOLD, the first thing that I want to mention here is a quick disclaimer that I do have a position with this one, but I'm going to really approach this one from a bit of an unbiased position as much as I can. So the first thing is the sustainable mining. So they have this program called Zero Harm, and really that's what intrigues me in with this company is that they are really trying to go for sustainable mining. Even though sustainable mining might not be something that is actually existing in its all full capacity as sustainable, because you are taking minerals from the ground, but it could be as sustainable as it can be in the industry itself. So their recent outlooks and earnings highlights were given in on, I believe, early on this month in August. So this one here, this is some of the highlights and I'll discuss them as I go forward. So for the highlights here, its attributable production guidance was reduced, lower actual production in H1 from Westwood and Rosebel, and their lower anticipated output for H2, partially offset by higher production in Essakane. So the cash cost guidance increased mainly to reflect lower production and cost pressures and stronger Canadian and US dollars, Canadian euros. And AISC also reflects increased sustaining capital spending in H2. Total capital expenditures for 2021 expected to increase by $35 million, primarily due to expected capital expenditures increase at Côte Gold. Site capital expenditures expected to be lower, primarily due to the expected reduction in planned work at Essakane and Rosebel. Côte Gold estimated 2021 capital expenditures are expected to increase by $75 million to $430 million. Now towards the guidance. So the first half, for Essakane, you had around 208 KOZ, or kilo ounces, and you're able to see that the prior guidance was between 365 to 390. Their updated guidance now is 390 to 400, so that's kind of better. It increased a little. Now Rosebel was actually previously as 220 to 245. Currently updated guidance is 140 to 160. Westwood was 45 to 65. Current updated is 35 to 45. So all in all, the current prior guidance was 630 to 700, currently 565 to 605. So the cash costs increased from 930 to 980 to now to around 1.1 billion to 1.15 billion. And in terms of all-in sustaining cash, you're able to see that the prior guidance was 1.23 billion to 1.28 billion, currently almost 1.395 billion to 1.435 billion. Now you're able to see as well some other cash capex operations in US million dollars, and the total here is 710 to 745 US million dollars. So in operations you're able to see lower cost, but in developments higher cost. Now in some of the quarter 2 overview, so corporate strategies. So mine sites FCF around $1.9 million, and adjusted net loss of around $3.6 million, or around a cent per share. Now they have $830 million in cash and $1.3 billion in total liquidity. Now effectively rolled forward the entire 2019 gold prepay from 2022 to 2024 and continued proactive management of COVID-19 with rapid response and strict protocols. Included in Canada's prestigious list of 2021 Best 50 Corporate Citizens by Corporate Knights. Now operational and growth. Execution of growth plan for Cody, overall project completion at 27%, and updated costs to between $1.125 billion to $1.17 billion, with $930 to $980 million remaining to be spent. And over 2 million hours without lost time at Côte, and consolidated safety metrics tracking better than the targets in first half, and developing districts de-risking both Gosselin delineation drilling. Now, environmental and social governments, so some of the recent highlights, for instance, relating some of the awards and everything and recognitions. So that's again relating towards the program I was talking to earlier on in the video, and some of the protocols relating towards COVID as well. So the workforce availability in Rosebel and productivity site leadership were impacted by illness, quarantine requirements, inbound employees rotation, schedule adjustments, inefficient shift changes, testing, contract tracing, and everything in between. So towards the end of Q2 and into July, cases in Suriname have been decreasing. The additional 360 beds that have been added to the camp to safely accommodate the necessary workforce have now been commissioned. Now, in terms of Côte Gold, the increased cases in Timmins area in Q2, small numbers of workers impacted during this wave, heightened testings, and additional constraints on site circulation, and you can anticipate the same for the rest. Days away from restricted or transferred duty, so they are actually below target there, and total recordable injuries are below target, so that's a good thing for injuries and days off work. Now, in terms of the Essakane, strong anchor assets continue to perform. The 2021 outlook, there's an increase there. Grades expected to normalize around the second half, and basically you're able to see that the mill feed to supplemented with stockpile to offset the impact of seasonal rains. So that's another thing as well, is that seasonal rains are taking an impact in reduced capacities. So for instance, Rosebel, which is a Q2 challenged by difficult operations conditions. So the first thing here is you're able to see that their production was 47% lower than Q1, primarily due to lower mill throughput, mill feed grade, and recoveries. Mining activities at Rosebel were primarily impacted by difficult operating conditions caused by increased COVID-19 cases, continuously unusual heavy rains causing flooding and restricting access to higher grade benches, and challenges in industrial relationships up until the resolution of the CLA agreement, which is in effect until August 2022. Now, lower ore availability at Rosebel resulted in the use of lower grade stockpiles to supplement the mill feed. RGM provides 64% of the mill feed at an average grade of around 0.48 G per T, and the other one, Saramacca, provides 36% of the mill feed. Now, AISC was primarily impacted by lower sales volume, higher cost of sales, and higher production sustaining capital. So for the outlook itself, so the trainable production guidance was lowered, and Samaraka, the construction of required infrastructure, is continuing with the infrastructure pad and sedimentation dams scheduled for completion in the Q4 of 2021, and the West Dump Rock Drain dewatering wells and bypass road phase 2 schedule for completion towards the end of year 2022. So this will definitely lower down these challenges itself, and cost pressure expected to persist into the second half, higher diesel, power, and haulage costs. So expected to provide R&R estimate update before the year end based on current information and negative impacts of certain factors. The total resources estimate is anticipated to decrease. So Rosebel focus areas for the remainder of 2021. So first off, in relating towards the COVID-19 impacts on workplace availability, so mandatory antigen testing program implementants and all workers on 14-7 work rotation being tested to reduce the impact on operations. So more testing and more contract tracing. Towards the end of the Q2 of 2020, cases in Suriname have been decreasing, so that's good, and they commissioned additional 360 beds. Now, flooding and restricted access to higher grade benches, focused on pit dewatering, clean up of excess water induced in pit wall failure to re-establish access to lower elevation, addressing geotechnical issues and optimizing of mine design sequence and in-pit road haulage improvements. Next, these activities are expected to re-establish an increased pushback access in the second half of 2021 and provide additional production phases at Rosebel and increase the overall mine grade over the remainder of 2021 below the reserve grades. Conditions in the pits are being improved, and the operations has met its updated plan for July. So again, dewatering, putting in some mitigation plates from geotechnical standards. That's one of the areas I specialize in civil engineering, so that's a good thing. Now, lower equipment availability. So ongoing improvement to the maintenance schedule and additional new mobile equipment scheduled to arrive in the Q4 and expected to improve the availability, loading, and reduce reliance on higher cost hauling contractors. And lower recoveries and plant processing challenges initiated an asset integrity program with multiple improvement initiatives to be run over the next 18 months to debottleneck the congested mill areas. Processing efficiency, ongoing absorption and desorption projects, which is intended to improve the efficiency of carbon absorption circuits. Now, in terms of Westwood, focus on safety. But before moving on forward, if you would like to see more contents like this, make sure to click the subscribe button on the bottom right corner and leave notifications on. Also, don't forget to drop a like to this video, and you can join our Discord totally free in the description below. Now, in terms of Westwood, so in Westwood here, he had underground operations in East Zone recommended in June 2021. The gold productions were higher than in Q1 by 14%, primarily due to higher mill throughput and partially offset by lower grade feeds, and staged recall of underground workers lower than planned due to low labor market conditions, so that's being affected there as well, and slower than anticipated productivity in underground mining activities impacted by the implementation pace of necessary enhanced safety measures relating towards COVID. An underground excavation resumed with 150 meters of lateral developments completed in Q2. And in terms of the outlook, you're seeing that adjusted downwards to be between 35 to 45,000 ounces, primarily due to reflect the implementation of additional safety measures. And the activities are expected to ramp up in the second half of 2021, and expected capital expenditures to be around $20 million, mainly referred to developments and construction of underground infrastructure that was deferred previously, and work on short-term 3-year operating plan expected to be completed before the year end as they continue to evaluate their assets and to define the optimal path forward. And finally, Côte Gold, which is building Transformation Valley in Canada. I did talk about this one before. So there is updated project cost updates, which seems to be increased as well, primarily as well relating towards different things. So for instance here, the project review identifies certain estimates project cost increasing, and you're able to see that the 70% share of the updated estimate project of July 1st, 2021, net of leasing has increased now, relating towards the USD CAD transfer rate as well, and changes in project cost estimated primarily driven by increased SMPEI cost for processing facility and increased earthwork and concrete, collectively representing almost 50% of the increase, an increased estimate mine facilities costs and other costs resulting in indirect costs, an increase in direct costs relating towards COVID-19 and exchange in the forex rate, and partially offset by the transfer of certain costs in operating period. So the current Q2 2021 updates, they have 27% of the project is completed, 82% of detailed engineering, and expended or around $193 million since July of 2020, and you're able to see some of the Q3 and 2021 outlooks right on here. The Gosselin Zode initial mineral resource estimated to be done by Q4 2021. Restripping work in pit is expected to continue during the Q3 period, and permanent camp is expected to be fully commissioned by Q3 2021, that is. And moving on from there, you're able to see some of their key milestones. So really, the first year of production will be in 2024, and the ramp up will probably be somewhere around Q3 2023. But currently we're at 27%, and the next thing here, we're already almost finishing up the major earthwork starts, but main access road complete, that's the next step, and then processing building enclosed, and start of owner mining. Now, moving on from there, you're able to see some as well of the updates relating towards starter pit, planned site overview, map construction, camp constructions, and the rest. Now, in terms of developments, so in terms of Q2 activities, I think we already covered all those stuff, but you're able to see that there is a lot of mitigation that they have to do in relations towards that. Now, in terms of the Q2 2021 financial overview, their adjusted EBITDA of around $84.8 million from sales of around 135,000 ounces at an average price of around 1,800 per ounce. The net loss of around $4.5 million, or around 1 cent per share, and an adjusted net loss of around $3.6 million, or around a cent per share. The mine site free cash flow of around $1.9 million, mainly impacted by lower production from the Rosebel mine. Financial position, so cash and cash equivalent, is around $830 million, largely undrawn. $500 million credit facility, $490 million is maturing around January 2025, and total available liquidity is around $1.3 billion. And they entered into a new gold repay for 100,000 ounces, collar range of around 1,700 to 2,100. What does that mean? It means if the gold does drop below 1,700, they have for 100,000 ounces a minimum to sell at 1,700. So let's say the gold goes between, let's say, 2,000, they can sell at 2,000, but there's a cap around 2,100. That means if the gold goes to 2,300, they're stuck at 2,100, 400,000 ounces. So at a cost of 4.4%, and together with the 50,000 ounces repay, around 1,753 ounces announced in May 2021, effectively rolling the entire 2019 repay on 150,000 ounces from 2022 to 2024, and will result in a total repayment proceeds of around 236 million in 2022. In terms of the outlook, so cash and cash guidance increased mainly to reflect lower production and cost pressures in a strong Canadian dollar and euros. Certain cost pressure expected in continue to the second half of 2021, and AISC also reflected increased sustaining capital spending in the second half of 2021. Now, in terms of revenues, you're able to see their revenues have dipped around $30 million. Their gross profit is around half. Their adjusted EBITDA is around 20% less from the previous quarter. And their adjusted net earning is now a net loss. And their cash equivalent is a little bit lower as well. So that's the main thing why it's resulting in more of a negative impact for this stock. Now, in terms of what I think about this one, we're going to talk about that at the end. But first off, let's take a quick look into institutional buyers. So institution is a bit mixed. Some are disposing some shares like JP Morgan Chase. Some are adding. BlackRock reduced by 1%. Heritage Wealth added. You're able to see Simplex Trading added around 73% of their shares, or 73% of shares. Raymond James increased the position by 3,300%. Fiera Capital added. So you get to see some people adding, some people selling. And in all retrospect, a lot of institutions sometimes sell just because of a price drop. Or they're just trying to divest from certain areas and not because the stock stinks. In terms of the short volume ratio, you're able to see that the short volume ratio goes all the way up to almost 74%. And that's insane because it shows you that the short volume out of the total volume, you're talking about 1.4 million shares on short volume out of 1.87 million of total volume is massive. More than half of almost every day's volume is going towards the short side. So it really does tell you that this is heavily shorted. Oil didn't take a dip really this year. I mean, if you take a look into a 1-year chart, yes, kinda, but over the 5 years, it's still one of the highest it's ever been. So that's something to think about. Why is this one dipping while the stock or the oil or the gas prices has stabilized? So we'll talk about that in the technical analysis part. Now, from a technical analysis standpoint of view, we're able to see on the moving average parts, yes, a lot of these things might look bearish, but it's because of the news relating towards it. So first off, news, fundamentals, all that stuff comes first. The fundamentals of this one is great because both price over sales and price over book are below 1. The current SP 500 is around 3 and 5 respectively. And in terms of the moving averages, things are looking a bit bearish. These are just based on historical movements, and since it's been dropping for a bit, so they definitely would look bearish. In terms of the willing percent R, which is very similar to the relative strength index, it definitely is looking like there's a lot more selling activity than there's buying. One of the most incredibly selling points or selling volumes it's seen for a while, and it means just it's oversold. More selling activity than usual. In terms of the MACD, that's negative, but the histogram is not increasing at a strong pace, so it really is just looking like more of a sideways accumulation with this one. In terms of momentum, it's currently negative below 0, 0.22 to 0.27, that kind of range. In terms of the stochastic fast and stochastic slow, both are very close to the bottom of that channels, indicating that this might actually be a good time to buy based on historical price action. We're going to refer to that in a second. In terms of the moving average bands, this one is expected to trade around 287 in the top and 234 in the bottom. Currently, it's at 234 anyway. In terms of the Fibonacci retracements, and I'm using a little bit of a not fair point, we're going to go from 534 or 535 from the top to 144 from the pandemic scare. The current Fibonacci retracement significant resistance is at 236, 293, 340, 386, 451, and 535. The only support on the Fibonacci scale is the 144. Now let's go a little bit back and try to take a look at all the significant supports that we're able to see here. Current level, there's a very critical support around the 231. Below there, around the 229, I believe it was, and the 229, 227, that kind of range, that's the lowest it's ever been before the pandemic frenzy. And below there, if we were to consider a bit of an unfair pandemic frenzy because a lot of stocks and everything just went downhill, around 214 on the bottom, and then below there around $2, and then around 199, which is the same thing, 188, and then down to 186, again the same thing, and then down to around 144. Resistances, we do have a few important ones. So the 251 seems to be a resistance, and then above there around the 262, that's another resistance, and then above there around the 283, and then it goes up to 298 or around $3, same thing, and then 318, and then upwards to 333, and then going upwards to 341, and then upwards to 347, and then 362, and then a very strong one at the 383 level, and then around $4, and then 417, and then 444, 467, going up to 497, and then up to around 536. And if we were to go backwards as well, we're able to see at some point it did reach as well as $7. Now, in terms of analyst recommendations, you're able to see 4 days ago there was a reiterated price target of $3 with a hold rating from RBC Capital. 19 days ago, price target was $4, a buy from the National Bank. And 21 days ago, reiterated $3 price target with a buy from Canaccord Genuity, and 21 days ago and 22 days ago respectively, $3 and $3.60 on a price target. Both are hold. The current average price target is around 53.85% upside at $3.60. It has 3 buys and 3 holds. So the question to Ed, what do you think about this one? Well, in all reality, I still have my position, and I'm looking to buy or increase my position by 50% more in the next few days or so. I'm just really pinpointing the perfect time to enter. This range here is still within range that I would consider a good time to go ahead and buy and increase my average. Now, in terms of what you think about this one, that will really come in towards a conclusion that you will draw from this video and from your research. Now, in my own perspective, I do need a bit more of a bigger hold position of gold in my portfolio. I'm still bullish on gold in general because I do think it does increase with inflation. That is almost at a discount rate of 4 to 5%. So that's the discount rate is actually the real inflation, but your government won't really tell you that. So look it up. Look at what discount rate actually is. It's the inflation rate that the governments themselves use in their own projects. So I do think that gold would hold its value. And I do think that a lot of this things happening right now is in relations towards COVID-19, and some of the climate change basically results into these mining, and it's impacting the entire mining operations of almost every company I've heard about in terms of gold and other mining minerals. And so dewatering, building dams, and all that kind of stuff, that will definitely help with increasing production back. And I do think by as vaccination rates increase in the world, and then putting in new measures for COVID and other safety measures, I do think that these guys will go back towards the positive earnings, and I do think it's more of a slip in the road. So I would like to increase my position, but that's my view. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots bots, you can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.